Stock futures edging slightly lower after Fed Chair Jerome Powell says the time for rate cuts is coming, but the central bank needs to see more good data showing inflation moderating towards 2%. Powell making the comments on 60 Minutes Sunday night. It comes after the January Fed meeting where Powell poured cold water on the first rate cut coming in March. Only around 15% of traders are now pricing in that cut. And there you're taking a look at the CME Fed Watch probability. Josh Schafer joins us now to talk through this a little bit more. Hey, Josh.
Brad, do you think he said that much different than what he said on Wednesday?
Not too much different.
I don't think he said too much different,
No,
right?
no.
I think there was one point in the interview that was interesting, and Goldman Sachs highlighted this. Jan Hatzius, his team, in their note today, essentially saying, well, 60 Minutes indicated that maybe off camera, Powell might have said, maybe we'll cut midway through the year, which if we're really extrapolating what midway through the year means, I don't even know. But that in theory could be June, it in theory could be later than June. But it was also interesting that they thought that in that they took out that the Fed could also cut 25 or maybe 50 basis points at a time, so perhaps steeper cuts. But the thing here, I still think the takeaway is when you look at, we just mentioned the March cuts, right? But look broader at the interest rate cut bets that we take a look at for the year. When you look at that graph and interest rate cuts for the overall year in 24, it hasn't changed that much. So when you look at that darker orange line, we're getting into the color thing here, Shauna, that we love to do. We'll go darker orange as the bottom and yellow as the middle, right? Darker orange was December when we really had the soft landing trade take off. Yellow is right after the Fed meeting. This is as of Friday. The picture of where we end this year hasn't changed that much, and that's been the big takeaway from most economists and strategists over the last couple of days. You can argue about March or May until your face turns blue, but if we're still going to get down to about 4% at the benchmark interest rate by the end of the year, that's what matters the most.
Yeah, exactly. And Josh, it's very similar to what we've heard from a number of economists, strategists, even on our program over the last several weeks, that there's way too much talk about the timing of that first cut. Obviously, we love to talk about it in the media, but really in terms of from a strategist perspective, it's all about the pace of the cuts and exactly what that rate is going to look like by the end of the year. But let's just focus on the short term, right? Because a lot of traders out there, a lot of our viewers are trying to figure out what the next couple of weeks are going to look like. How much pressure is on these earnings reports to live up to expectations, to exceed expectations, given the fact that we might not be seeing a rate cut anytime soon?
No, you definitely puts more pressure on the fundamentals, right? Because that's really one of the only, I guess, quote unquote, positive parts that you could have in the overall story right now. If you were someone that was betting on rate cuts to then increase earnings, coming out 3-4 quarters from now, well, that's not coming necessarily right now. So you're looking at what's happening right now. We have seen a little bit of a turn here, guys. I mean, when we take a look broadly, I was sitting here a week ago and we were saying you kind of need big tech to turn the story around, right? We have overall S&P 500 earnings per share is negative right now. And then you look at what big tech did, we're positive again for the quarter. A lot of people made things about the Microsoft and Alphabet earnings. Obviously, the stocks didn't do that well, but it was interesting FactSet pointing out in their note, they still beat estimates. They still beat the high bar. It just didn't really work for investors based on where the stock price is. But what we're seeing in earnings right now has been pretty solid. Savita Subramanian, I'm looking at her note right now from this morning, highlighting a 6% beat, saying it's, quote, debunking the bears. And I think overall you're seeing a decent narrative play out. Of course, not everyone has been a winner.
Debunking the bears. I like that. All right.